Okay, all right. Let's bring in our guests then for the next half hour. We have Dharmesh Kant as well as Kiran Jadhav who join us to help us resolve all your queries. Good afternoon, gentlemen, and thanks so much for joining in today. But let's get straight to our first query. We have Ms. Anjali Upadhyay who writes to us from Maharashtra. She holds around 350 shares of Jyoti Laboratories at a price of around 178 rupees. She's a short-term investor, wants to know whether or not to hold on or sell. Kiran, let's come across to you first since it's a short-term investor. What would your advice be to Ms. Upadhyay?
Well, Mangalam, the kind of chart pattern, I'm not very upbeat on this, looking at the kind of chart structure that this stock has. I believe that the current chart structure is a pretty weak, but however it holds above the major support. That's the only reason that I have a hold on this counter. The stop loss should be 135, and a pullback rally should take the stock to around the 175-180 mark, where a review should be taken once again.
Okay. Dharmesh, you have a call on Jyoti Lab. I mean, it's not been a great performer, but is there value in the future?
Yeah, definitely, yes. If you look at the Jyoti Labs, it has managed to see the competition well, and they have a very limited product portfolio. But what I see going forward, I mean, the valuations are quite comfortable. The stock price has corrected significantly, and whatever products they have, be it the soap segment of Margo or Pril, the washing detergent segments and all, they have been consistently holding on. So 7-8% kind of a CAGR they have given for last 3-4 years on the top and bottom line, ROE in 15-16%, and valuations is at around 20x 1 year forward PE multiple. So compare this to HUL and Davos of the world, it's a very pretty low valuation, but at the same time they give a very better ROEs. So which is not there. So that is the reason why the discount is there. But I think going forward, if the investor is willing to wait for a year and a half, so 200-210 can be the likely price target.
And the management has also been talking up their outlook, right? They said H2 will be better. They aim to be debt free by 2021 sometime. So I guess there could be a few triggers to look out.
They have done that. They have consistently reduced their debt, and it was a general slowdown across the economy. So I think that was the reason why even Jyoti Lab has to bear the brunt. But going forward, I mean 10-12% kind of a compounding on the top and bottom line can be expected.
Okay, the next query comes to us from Mr. Ganga Sahai, who's written to us from New Delhi. He has 200 shares of Biocon, and so we don't know the price at which he has bought it. So therefore difficult, I guess, Kiran and Dharmesh, both for you to actually answer this question of whether he should remain invested or not. Therefore, let me, change the question a little bit. Dharmesh, first to you, if somebody was to buy Biocon right now, should they?
No.
I mean, you don't know what price he's bought it at, right? So it's as good as a query for today.
So, but the current price at which Biocon is trading is pretty expensive. So 38-40 kind of a TTM P multiple is there, and if you look at the last 5-6 years, so the compounding has been only 10-12% or less than that even on the top and bottom line. It has been more of a news flow kind of a scenario, and the stories have been built around that they will get US approval for this insulin product and all, which still has not come through. So couple of products through Mylan and Pfizer they have been able to launch through biosimilars in US market, but otherwise it's very limited product portfolio which they are having. And even Syngene is more of a research and cramps rather than, even the Syngene business has not exploded the way it was anticipated. So I think pharmaceutical as a space has further better opportunities out there in the form of Sun Pharma or in Aurobindo Pharma. Okay. So fresh investor, I won't be advising to buy Biocon at current levels.
Okay, all right. So you're saying that if given an option between Biocon, Sun Pharma and Auto Pharma, you rather pick the other two rather than go in for Biocon. Okay, all right. So that's the fundamental view that's coming in there. Kiran, what about you? On the charts, how is Biocon looking?
Well, the chart seems to say that it's in a clear uptrend. It has done a trend reversal price pattern called as an inverted head and shoulder. Its target is at around the 350-360 mark. Currently trading at 280. I believe that there is little to lose and more to gain. So here I have a stop loss at 258. Currently trading at 280 and a target of 350, which should be achieved in 6 months or so.
Okay, all right, then, so that's the view on Biocon. But let's move on. We have Shreyas, who writes to us from Karnataka. He wants a medium-term view actually on Tata Steel as well as Tata Motors. Well, these are going to be the more global-focused stocks. Dharmesh, what's your view on both these two? Tata Steel has bounced from the lows, and Tata Motors, I think, when everyone was throwing in the towel, it went all the way to around 120 rupees, and from there it's given you a quick 60% return. What would your view be on both these two?
So first on Tata Steel. So Tata Steel, we have a positive view, and I think there's more steam left to be run, because domestic steel market has picked up considerably.
Okay.
Prices are firming up, volume have also risen, and if one goes by Government of India, all 100 lakh crores kind of infra spending, and if it comes through, so there is no looking back.
Okay.
So valuations are pretty cheap. If you look at book value, 612 is the book value of Tata Steel, and it's available quite less.
Okay.
And 480 kind of a level it's trading as of now. And even on a TTM basis, it's a 6 PE multiple. Only problem is the European business, which the management is very focused on, getting it through.
Yeah.
So they have already raised a date as far as refinancing of one of the plants in Europe is concerned. But I think that's not the solution. They have to get the EBITDA positive going for the European businesses, which has been a challenge for Tata Steel.
Yeah, either turn it around or get rid of it. But at present, they can't find a buyer for it.
Yeah.
So you're positive on Tata Steel?
Tata Steel, yeah.
At these levels. What about Tata Motors?
Tata Motors, if you look from where it came down, so 80% kind of depreciation was there, and now it has picked up. But Tata Motors is more of a trading kind of a play. So because if you look at the contribution, 75% is from JLR.
Yes.
25% is from the domestic market, and JLR, the margins in the last 5 years has decreased.
Yes.
It's a premium segment.
Yes.
Premium segment is only for margins.
Yeah.
So if you look at 2014-15 margins, if operating margin was 15%, it has come down to 8-9%. And the competition is hitting up, economy is slowing down even globally. So I don't find a reason how Tata Motors can turn around.
Okay.
As far as product launches are concerned, they have been very consistent and aggressive in launching products, but none has worked. What has worked was only JLR, which was established brand.
Correct.
So my call is, if you are riding the rally, please ride on 10-20% more from here, book your profit and be happy.
Okay.
Okay, Kiran, you want to give a 1-year target on both stocks?
Well, yes, both are a buy and a hold. I believe that Tata Steel should be bought with a stop loss of 456, target around 650 should be expected. And Tata Motors, again, a buy and a hold, stop loss 168, and 300 should be my target in the next 1 year.
All right, gentlemen, stay on. We'll just take a very quick break. We'll be right back. There are lots more queries to be answered. Stay tuned.
Welcome back then. Well, the markets are now back towards the 12,300 odd mark. There is some kind of profit booking from the top. So a few stocks should come up on the screen. Bharti Infratel, that stock has seen a bit of a knock. It's seen some profit booking, but I think the reason that the markets are under some pressure is because of a couple of larger names. So pull up the intraday chart of Reliance Industries. Just a few minutes ago, the stock was trading in the green. That's a large weight. Now that's moved into the red. So that could be one of those stocks that should come up for you. Yes. And you have TCS as well. The stock is down close to 1.2% in an otherwise strong market. Remember that all through the trading session, the Bank Nifty has not been the place to be because that's underperforming. In fact, now that's in the red. So pull up the Nifty Bank, that's in the red, while the Nifty is up close to 45 points, all thanks to Infosys and a couple of other IT majors as well in there. TCS is in the red. Nifty Bank has 5 IT stocks, 4 out of 5 in the green, only TCS in the red. But let's move on then. We have Dhaval Mishra, who writes to us from Odisha. He has some shares of Nestle and wants to know what to do with the stock. Dharmesh, what does he do? How long should he hold on for? I don't know what price he's got in, into the stock, but premium multiples, maybe in fact, one of the big outperformers as well. I think it came into the Nifty at around 10,000, 10,500 rupees. From there, at that time, people said it's expensive. Now at 14,000 rupees, people say it's even more expensive, but no stopping the stock. What would you do?
So it's the same story with even HULs of the world, right? So, but given a choice, I would still shift to HUL
Okay.
than Nestle. The reason being, if you look at the ROEs, HUL has a much better ROE than what Nestle has.
Okay.
So the compounding growth would be the same. It would be a single digit kind of, 9-10% kind of a CAGR they will give on the top and bottom line. Product portfolio, Nestle, there is nothing wrong with that.
Right.
But just given a choice between the type of return ratios HUL enjoys,
Right.
and the diversification of the product portfolio which HUL enjoys. So I would suggest your investor to shift from Nestle to HUL.
Okay.
Okay, in fact, this earnings season, my colleague Mangalam had just put together some estimates we had from Edelweiss as well. What's the kind of volume growth that the companies could see. So amongst them, it's actually, this whole Nestle, which is at the top of the pack with about 9% volume growth expectations. And then, of course, there's paint companies, so Asian Paints, Berger, etc. But HUL, Dabur, Colgate, Britannia come pretty lower down. So with the expectation of just about 3 to 4% in terms of volume growth. And for ITC, it's just at about 2% odd. But Kiran, you look at this whole FMCG pack, where does Nestle fit in the puzzle?
Well, Zumaira, the whole logic of technical analysis is all looking at chart patterns and positive divergence, negative divergence. So Nestle, for me, is a buy, hold, and it is giving a good positive divergence on the charts. The stock had seen a tremendous rally from July this year, from a level of around 11,000 to 14,500. 14,900. After this stupendous rally, the stock is trading in a tight range from October this year. So I believe that the breakout should come in soon. The breakout level is at around the 15,000 mark. For now, I suggest that someone who has bought and has to buy should buy with a stop loss of 13,750. Target should be around 20,000 plus from with a 1 year viewpoint from here on.
Okay, all right, then thanks so much for that, Kiran. Well, let's go to our next query by Mr. Pramod Joshi, who writes to us, and in fact, he wants to know if he should be buying Coal India shares at this point of time. Before we get to both our experts, just want to tell viewers one thing. Coal India, last few days the stock was under pressure because commercial mining of coal has been approved. Now everyone said that that's going to break the monopoly in terms of Coal India. But keep in mind, if any coal has to be sold as well in the open market, that's at least 2 to 3 years away. So it's it's some time away. In the near term, it appeared that the concerns were overdone. And also in the fourth quarter of every fiscal year for the last many years, I've seen that quarter 4 is not about the operational performance. It's in fact more about a dividend play story, and that's likely to be the case even this time around. That said, Kiran, what's your view on the stock at around 210 rupees?
No, I have an avoid for this right now. I believe that Coal India is still in a range and the breakout has to happen. Looking at this, the breakout level of Coal India is around 216. So I'll wait for this to break out. Only then I would buy Coal India.
Okay, the next query comes in from Mr. Adarsh Agarwal, who's on the line with us from Mumbai. Hi, Mr. Agarwal. Good afternoon. How can we help you?
Good afternoon, ma'am. I have purchased Adani Gas at 184, quantity to 2150.
Okay.
So what? I am a long-term investor. I can hold for next 24 months. What is your forecast? Should I add, hold, or sell?
Kiran, I'm going to come to you for this because, adding when a stock is, on the downside becomes very, very tricky. So therefore, what would you advise our caller to do?
No, I think Adani Gas should be held on. My view is that a stop loss of 145 has to be applied. Hold on. I believe that there is much more strength to this counter. Looking at the kind of move that we have seen and near the all-time highs, 180 is the next resistance. When that is taken off, we'll see a great rally in this counter as well. So a strict stop loss and hold and buy, add more above 180.
Okay, all right then. So that's the view coming in there on Adani Gas. A quick word on the markets, though we did see some profit booking. Reliance Industries was the one that was putting pressure on the index. So get the intraday chart up for you on the screen. And as our ticker team is rightly pointing out, ICICI Bank is another one that's underperforming today. And with that, you have a few of these banking names as well. Yes Bank, well, that stock is seeing a selling pressure. It has its problems of its own. But SBI has moved lower. Just pull up the intraday chart out there. You have Axis Bank as well that's under some pressure. And the Nifty Bank on the whole is more or less flattish when you have the Nifty up close to around 0.4%. Or that's telling you the kind of underperformance we've seen from the Nifty Bank today. But we have another query that should come up for you on the screen. Mr. Mukherjee writes to us from Bengaluru. He holds around 80 shares of Arvind Fashion at around 436 rupees. Long-term investor wants to know whether or not to hold or to sell it. Dharmesh, do you have a view on this stock? I remember they were talking about the demerger. The demerger took place, but there was market cap erosion instead of creation. Right. And that was telling you the kind of premium multiples that the market was giving it at one point of time. Now the stock is languishing. View on the stock?
Yeah. So I have a positive view. Since he is a long-term investor, so he should remain invested.
Okay.
See, post the demerger, there has been many restructuring which the company has undergone, and few of the brands they have to close. Institutional sales of Arrow shirts were closed, and some royalty payment where they have to make. So that is the reason why on operating level losses were being reported by the company, and I think FY20 they will end up in a loss. FY21 would be more of a consolidation kind of a phase, and FY22 would be the turnaround thing. So just to see, they are the top line is 4,500 crores. So even if you take 10% kind of a compounding on top line, so FY22 it would be around 6,000 odd crores kind of a top line this company would be reporting. And all the costs they have taken care of, and then operational efficiencies will kick in, and they have all the good brands, be it Arrow, be it Calvin Klein, be it Tommy Hilfiger, Gap, US Polo, every flying machine, everything is there, and they have been selling quite well. A shift to brick and mortar and online portal has already taken place, and retail foray has increased rather than institutional foray. So even if you take 7-8% kind of a profit, so it would be around 500 odd crores of profit for FY22.
Right.
And you are getting a company at right now at 2,300 odd crores. Okay. So 10, even if you give it a multiple of 10x, it would be 6,000 crore market cap, which is a multi-bagger, 2x return from here. So if the patience is there, if you can buy and hold and keep on holding for 2 years, I think it's a very good play on the retail fashion side, on casual and denim wear.
All right, Dharmesh, Kiran, thank you very much for joining in and for answering all the queries sent in by our viewers. We'll wrap up on your stocks for today, but as we do that, here's a quick programming reminder. MF Corner is now your budget hotline, where mutual funds